Здравейте! Аз съм Пламен Андонов, а това е българският криптоканал.
Okay, and we're live. So, good day to everybody who showed up today at 23rd of December. It's 5 p.m. Bulgarian time, and around the world, I would imagine it's quite a different time. With me is Alesh, who's going to assist me to co-host this podcast with Edward, who is actually the Bulgarian crypto community is quite familiar with, because quite frequently I show some of your tweets and I comment on them and so on. So, Edward, without further ado, could you please just like say a few words about yourself, whatever you feel like is relevant, like where are you from, what do you do for living, what's your personal crypto story?
Yeah, thanks, Plamen. Hi everybody. My name's Edward, and you may also know me as a venture founder on Twitter. So, I started this Twitter account actually back in May. So it was I remember the day. It's May 13. It's right before the ultra crypto plunge back in May 2021. So, and I just wanted to initially share my thoughts and my personal analysis with everybody on Twitter, because I noticed that, I was already doing lots of these analysis myself. So why not share it with everyone? So that's why I started this account on Twitter. Before that, I invested in the crypto market, as well as the stock market, for many years. I first got indoctrinated into crypto back in 2017 cycle. So I caught the tail end of the cycle over there and just gone through the whole process. Right now I'm an investor and advisor to a few different crypto projects and DAOs, and I'm really excited here today to talk about crypto and have this conversation with Plamen and Alesh.
Yeah. I was getting. Okay. Really good. Actually, you mentioned that was one of the questions that I've written down to discuss later on. Also, interesting that your first with money on the table, interaction with crypto was in 2017, but I doubted that this was the first time you've heard about Bitcoin. Do you remember when was the first time? Wasn't it earlier?
It was in 2017. I probably heard about Bitcoin back in maybe 2013, because when the buzz cycle happens, when the bull market happens, everybody's just talking about it on the media, and there's no way that you would not hear from it if you go on the internet. So back in 2017, I was still in school, and actually I was just starting school back then, and I definitely just didn't even take that much notice. It was written off in my mind. It's a bubble thing. How crazy this is, going from a couple of dollars to a couple $100, and clearly in my mind at the time I probably thought this is a bubble. Everyone who's investing in Bitcoin is going to lose all their money, and it's not something that I was interested in back then. But I wasn't investing in stocks even then. But this was written off pretty quickly in my mind at the time.
Okay, and I would imagine that because you said that this is just a bubble thing, I would imagine that at that time you still did not properly give it time to educate yourself on what is actually crypto, what is the blockchain distributed ledger technology, what is proof of work, proof of stake, and so on.
No, I had no idea what was going on back then. Back in 2013, I think if anyone who had been invested in crypto or Bitcoin back in 2013, they would have been a very successful investor as of today. I think every cycle, as it happens, it brings different people into the loop, and it takes time for your mind to even process this information, right? Like if I had just started with crypto investing in this cycle in 2020, I probably will not have the kind of mindset that I have today, but only because I invested in the last cycle. And granted, I did, had some losses back in the last cycle, and however, I didn't quit the market. I become more engaged with it and learn about it more over the years. And that's what got me ready for this cycle. So I think it takes time. Even if I were able to understand Bitcoin back in 2013, and then the next cycle, the 2017 cycle, would have been the cycle that I made a lot of gains.
I see. Yeah. That's the thing, like how majority of the people, when they get introduced to crypto, as it's quite complex to understand, and at the same time, especially previous years, there were no podcasts like this, right? Like my personal education mainly came from Rsi Antonopoulos. I don't know, maybe I'm butchering his name, but anyway, him talking about infrastructure inversion, him talking about how thanks to Bitcoin, thanks to Lightning Network, we are able to make these micro payments that are just not possible with Swift and Visa and so on. And I got hooked on the technology, but it takes time. You really have to put effort in. Today, it's easier than ever with what Bitcoin did, with the What is Money show from Robert Breedlove and so on. All of these content creators inviting great minds, speaking about the technology, speaking about the potential profits that a person can do if he invests in this early on. Really, actually, now it's just easier to educate yourself. So I feel like there is no excuse today to still think that, it's just a fad, it's a bubble, or it's rat poison, and so on, as some people say.
Yep. The education part is huge. I think back in, I bought my first book about crypto in 2017. And back then on Amazon, there were probably maybe a dozen books about Bitcoin and crypto. I bought 2 books. One of them was Blockchain Revolution. The first one was called Bitcoin, Ethereum, and something. And like the education part was very limited back then, because there weren't as many decentralized content creators such as yourself. There weren't that many, Twitter users that are tweeting specifically about crypto and Bitcoin, like me, for example. So, this process of educating the public, educating everyone, and lowering the bar of education on the crypto and Bitcoin front really was something that took tremendous growth in the past 4 years. And I would say, many crypto influencers today who are educating and making videos on YouTube, they probably didn't start making serious videos until roughly the end of last bear market. They probably started in 2019, yes, 2020, 2021. And then not many of them have got huge followings on YouTube or in different social medias.
Yep, all of the big channels today, they kind of started very late 2017 or 2018, 2019. And but that's at the other side, it's kind of a good thing that they had the time, they had years to be able to practice content creation in order, there is this word, if you wanna really learn something, start teaching it, because then you start getting questions that you yourself didn't ask yourself and you didn't know that you don't know the answer to. So in order to really put your course into something, you have to start teaching it. So let's talk about cycles. Let's start from, I guess, the obvious thing, which is the Bitcoin halving. The last Bitcoin halving was in 2020. When was it exactly? Was it in May, I think? Yeah.
Bitcoin halving, I believe, was like May 20 of 2020.
Yeah,
that's when it happened.
And the next one is going to be 2024, expected. And the previous one obviously was 2016. So usually we create a supply shock due to reducing the miners' reward, and miners obviously they foresee the halving, they foresee that next month or in 3 months or in 6 months, their revenue is going to be cut in half. So I would imagine in their business model, they're, like calculating this. So it's not like, they sell all their stash until the very last moment. And then the next day, just the revenue cuts in half until they actually start, the price of Bitcoin is able to match the lack of supply. So since 2020 May, we had the first run up to the end of the year, 10k to 30k. Then the year started at 30,000, went to 60, and we stayed there for about 3 months, 50, 60, 50, 60, around that range. And we stayed there for about 3 months from like February until April. And then we started dropping after the announcement of Tesla that they stopped accepting Bitcoin, which kinda shouldn't matter because I highly doubt that they sold more than 5 cars for Bitcoin. Then we had the the ban of the crypto mining in China, which this is now significant because you dropped the defense of the Bitcoin network, the hash rate, you dropped it by half pretty much, actually over half, I think it was like 55%, and this completely destroyed the price. We had a lot of liquidations, 40 to 30,000, it happened literally in a matter of hours. Did I miss something so far?
Yeah, that's a good recap of the events that happened along the way. I think one thing that I would add is that the bull run in the beginning of the year, from December 2020 to February of 2021, that bull run before Tesla announced their buy for Bitcoin was to a good degree, I think it was driven by Grayscale Bitcoin ETF, not ETF, Grayscale Bitcoin Trust, buying lots of Bitcoin in those days. They had a huge premium on their closed-ended funds, and that means, every dollar they're getting paid to buy Bitcoin, right, in their trust. So, of course, they're going to buy all the Bitcoin there is until that premium becomes negative. Then they will stop buying. So I think that was like the beginning point of that bull run. And then afterwards, Tesla, the money buying in China, hash rate drop, and summer sell off, and we've been choppy ever since.
Okay, I just wanted to outline the like major events that were driving the price up and down, and just the major price points. So it was beginning of year 30, then 60, we stayed there for a while, then 30 again, we stayed 40-30 range, like in a triangle for quite a while, and after that in late July you started climbing up with a good month of August, kind of bad month in September, good month in October, November, kinda, and then December we started declining again. So GBTC, actually, let's dive a bit deeper into this. You said that at the beginning of the year we had a massive premium. I think it was going all the way up to 30%. And then at the moment, actually just a few days ago, we had the historic lowest, meaning negative, not funding, but what was it called? Premium. So when it's negative, what is it? Negative premium or something?
It'll be a discount.
Discount of the GBTC compared to Bitcoin. I think it was like 21-23%, something around that. So please tell us who is buying GBTC, and when the GBTC we have a GBTC discount, isn't it a good idea for someone who has Bitcoin to sell the Bitcoin and put that money into GBTC?
Yeah, so I think the GBTC the GBTC issue has to be looked at between what GBTC does and its closest competitors.
Okay.
There's a reason that it's trading at a discount. It's because clearly the market has not priced in the SEC approve any spot Bitcoin ETF anytime soon. Definitely not in the next 6 months or so, because the buying GBTC shares would essentially lock you in for 6 months period. So you will not be able to trade your shares unless it is 6 months later, right? So of course, when it gets to a point, when the discount is low enough, it might be profitable to make a trade like that. But on the other hand is, if you are, say, factoring in for let's say additional discount that's going to come, because at one point, the lowest for GBTC premium were around minus 15%. So that's pretty steep already, like a 15% discount on, investing in Bitcoin essentially, right? So now it's like you said, the lowest point last week probably was minus 25%. So it could go lower, right? And I think, of course, there has to be a point that just stops, because it doesn't make sense anymore to go any lower than that. But it's hard to say what the discount rate would be, especially given that there are so many competitors for GBTC out there now, including the futures Bitcoin ETF, including all the spot Bitcoin ETF in trading in other countries in the world, including Canada, Australia, exactly, in Europe, right? So it's got a lot of competition from other people who want to invest in Bitcoin. So I guess, the thing is, the question is, for any investor interested in an investment product like GBTC or Bitcoin ETF, are you interested in capturing that, 15% or 20% premium, or are you just going to, put your mind at ease and just invest in a GBTC alternative that gives you the option to buy, sell, trade at any given time? Because of course, in 6 months from now, you could say that, the price for Bitcoin is going to be higher than what it is today. It could also be lower, right? It could also be lower. We could have a historical bull run up to 100K or even higher, and then drop all the way to below what the price is today. So it's hard to say a forecast in a 6-month period where Bitcoin price is in this case. So I think, having that optionality, the optionality to trade your Bitcoin, to buy and sell at any given time, I think that option might be well worth the 25% discount the market is pricing in right now. So I think market, to a degree, it's intelligent in a way that it prices in certain informations collectively from all investors and traders. And right now that is saying, the option of the option and the ability to trade your Bitcoin in the next 6 months is worse than 25% discount in the Bitcoin prices for investing in GBTC. The market may be wrong, but it's at least pricing in this information. Otherwise, the discount would not be as steep as it is today.
Okay.
I just checked historical premiums, and I was surprised. But what was the highest premium in GBTC?
20-30%.
How much?
20-30%, I think it was.
Edward, how much do you think?
I think I looked at the data in the past. I think back in last cycle or before, it was probably really high, like over 80%.
It was 130%, yeah. Before in 2017, 130%. Imagine that. I just checked and I was like, I didn't know.
There's a reason why GBTC now holds over 600,000 Bitcoin, and that's because they've been buying like crazy over the years. As long as they have a premium, they're getting paid to buy Bitcoin. So why not? So, these guys buy all the time. They accumulate it even in the bear market. And that's why they scoop up such a large share of Bitcoin, like 600,000 Bitcoin. It's no small amount. It's huge.
Yeah.
It's massive, yeah.
Okay. So let me put the big question on the table. Is the bull run over?
I think at this point, it's more likely that will continue this cycle, and you know, and there's a few reasons why I say this is more likely than not. You know, we have to look at evidence from both sides, right? Whether we're likely to continue, or whether this is the top and we're just gonna, you know, sunk into a bear market now and until the next halving. A couple things, I think, on the side of evidence that support that the bull run is now over. It's not over. It's that, you know, using historical data that we see with Bitcoin and the bull runs and the 2017 and 2013 cycles, to a degree, you can see that this bull run has more steam behind it, and it's not running out of steam yet, not yet, at least, right? And of course, and you always have to be careful looking at past data from 2013 and 2017, because you have essentially very few data points to predict what's going on right now. And every cycle is so different in its fundamental events that happens, the narrative that's driving it, the adoptions, whether there's institutions or retails and different makes of investors, that you know, you have to be really careful looking at the data. But first thing I would say to get it out of the way is that looking at 2013 and 2017 data, it suggests that on many fronts that the cycle is not over, because you know, if any of the history is any indicators, we compare it with the state of Bitcoin today, it just seems like we had more to go at this point. The second thing I'll look at are the fundamental events that are kind of different today compared to 2017 and 2013. Right, and what's really important in this cycle is that not only do we have the technical picture, not only do we have the technical analysis on Bitcoin now, we can also do what's called on-chain analysis, and that's a good amount of analysis that I do is on-chain analysis. So on-chain analysis, looking at behaviors on-chain on Bitcoin to basically use data science to you know, intelligently group different a useful set of data together and try to see what we can you know, what we can draw a conclusion from this information. And there's a couple things. One is that the exchange balance for Bitcoin has been going down. It has been almost you know, since basically March of 2020, it's been going down. It had a little spike up in the May of 2021 period during the sell-off, and now it's still going down. So you know, this suggests that, you know, supplies are being taken off the exchanges. This is what's called an illiquidity event. You know, usually it suggests that the Bitcoin would like to run higher, right? Because supply is being constrained right now on the exchanges. As long as there are enough demand, the price should go up.
Okay,
right?
just a second. I wanna ask a question here about this. Please, like, remember the rest of the points that you wanna take, but it's a question exactly about this one. Historically speaking, if you look at the chart of the exchanges supply, this is the first bull run where consistently the price does 6x from 10,000 to 60,000, and consistently the amount of Bitcoin on the exchanges has been only dropping. Yes, as we said, in May we did have a small spike, and after that, at the moment, again we are at a local low, meaning that we have a less Bitcoin today on the exchanges than we had back in April, back in May, back in June. And now, if I remember correctly, actually it's over 3 years was the last time that we had only this amount of Bitcoin on the exchanges, which is like just over a million and 100,000 or something like that. So why do you think that is? Because what I mean is, if you look at the same chart 2017, it was going up and up and up and up, and to me it makes sense because you have you know, the price going up and people start waking up and they're saying, my Bitcoin's worth that much, and they start depositing and they start selling. Maybe retail just keeps it on the exchange and doesn't withdraw it or something. And 2017 up until the end, and even after that, this graph, meaning the amount of Bitcoin on the exchanges, was only making new highs and new highs and new highs the whole time. And now, as you said, for over a year, like what is it now, a year and a half, it's been going down. So why do you think is that?
Yeah, that's a good question. I think there are probably a few reasons that I can think of. For example, institution demands, like I said, different Bitcoin ETF around the world, different investment institutions around the world, getting that Bitcoin allocation, whether it is 1% or 5% Bitcoin allocation, this adds up to be a lot of demand for Bitcoin, and that translates into a lot of Bitcoin being withdrawn from the exchange wallets to either custodian wallets or cold wallets or to the another service platforms or whatnot. Another factor that I would say is probably because of the rise of DeFi. So now we have different decentralized finance platform today that can earn you a yield of depositing Bitcoin in that platform, and that can earn you anywhere from 2% up to maybe 10% interest paid in Bitcoin. So that would also cause a lot of amounts of Bitcoin being withdrawn from the exchanges. And also, I think because of the public awareness of not your keys, not your crypto, people withdrawing from exchange wallets and holding it in their cold wallets or their own personal wallets where they can control their private keys. I think this is also another factor that's driving it, because over the past 4 years, we've just seen so many hacks in exchanges. And exchanges are getting better and better now with managing their security. They tend to keep more than 95% of their crypto in cold wallets offline, so they couldn't be hacked. But still, it happens, and every time it happens, it makes pretty big news. Hundreds of millions of dollars in crypto was lost. And so I think that is another public awareness campaign where most people, not most people, but a lot more people today are withdrawing their Bitcoin and for their self-custody. Also, I think another underlying factor underlying all of this is just that the awareness and the mindset change among a lot of people. I think I was involved in the 2017 Bitcoin cycle, but I was not, I wouldn't say that I'm a Bitcoiner, right? In fact, funny story, back in 2017, I did not own Bitcoin. I did not have a single Bitcoin. I went to all the other coins, all coins that promised 100x. I think that was a beginner mindset where you go for the highest returns, and you look at Bitcoin like, oh, this is old tech. This is something that isn't going to go 100x. So obviously, I'm going to go and put my money into something that go 100x, right? That is still true today, I think, for beginners, new entrants of the market. More of the speculative side of things. People may think, I'm not going to buy Ethereum. I'm not going to buy Bitcoin because I'm not going to get 100x from these. I'm going to buy, smaller caps. And I think that's why, meme coins and a lot of these tokens in the smaller cap categories sometimes end up returning massive amount in a very short period of time. Anyways, so I think this is also a mindset change among a lot of people, who've been involved in the previous cycles, and in this cycle finally get converted into Bitcoiners. Certainly for me, that is the case. Certainly for lots of internet celebrities out there, like Tom Brady, Michelle Pan, these people who are turned on their laser eyes on Twitter. They are they're signaling to the world that they're Bitcoiners, right? Okay. And
one thing
to
here,
be,
sorry.
Yeah.
One thing here. The thing is that because you were saying how newbies coming to the crypto market, they're like, I'm not gonna buy Bitcoin, I'm not gonna buy Ethereum. Why? Because it's old tech, and not only because of that, meaning that old tech means that there will be something that's much better, like faster transactions, cheaper transactions, or a lot of additional functionalities that, let's say, just Bitcoin or Ethereum are too old to be able to supply or something. But the other thing, as you said, is the 100x potential, right? Because I agree, yeah, for Bitcoin to do 100x, well, maybe one day, but in the next 3 months, in the next 3 years, I highly doubt it, right? We have a consensus about that with newbies and people who actually have experience. But the thing is that the difference between them and people like celebrities, they are not looking for 100x, right? I mean, they don't need the 100x, because people who actually, majority of the time are looking for 100x, they're people who are just retail, people who have a few $100 or a few thousand put aside, and they're looking for a life-changing amount of money with their savings, which is really not that much money. Tom Brady, he's not looking for life-changing amount of money. Whatever he wants to purchase, he can purchase it, right? So my point is that from his perspective, he's more looking like a alternative investment. That's good. He's also maybe understanding, I would say most probably he's understanding the problem that Bitcoin solves. So his investment thesis is completely different from retail, from the fresh retail, from the new retail entering the crypto markets.
Absolutely, absolutely. And that was, that was the point I was getting to, because if you look at, I talk about this mindset change, right? It really is a mindset change, because I don't view Bitcoin as an investment anymore. It's not a speculative investment for me. For me, it's my savings account. I allocate a good portion, a sizable portion of my earnings going into Bitcoin, because it is my savings vehicle. It's not my investment vehicle. If I want something with higher returns, I'll go with the investment route. But Bitcoin, it's not an investment for me. It's the way. My thesis for, like you said, my thesis for investing in Bitcoin, it's entirely different from something like Ethereum or other Web3 altcoins, because I'm not looking at Bitcoin as an investment. It's just a way that I put my money in. It's an alternative form of money, and that's really how I view Bitcoin in today. So that's entirely changed from back in 2017 when I first enter the crypto market, and I look at Bitcoin as, another speculative investment. Obviously, I'm going to go with a higher tier in the risk side, and get at that 20 to 100x, right? So I think what happened, this is another factor with that the exchange balances are drawing down, is we got people in this cycle with bigger wallets that are not seeing Bitcoin as a speculative investment, but rather see it as a store of wealth, right? And that's, that could take down a lot of the exchange reserves as well, because like you said, Tom Brady's got a big wallet. Tom Brady probably had, a couple maybe like 20 or $50 million laying around. He just put into Bitcoin, right? That buys him, I don't know how many Bitcoin, like 1,000 Bitcoin, right? So it's it's a mindset change, I think, for many people. So this, I think it's a big factor in celebrities. It's looking at celebrities and professional sports athletes like Tom Brady and music artists. These guys, they make a lot of money fast, and many of them are not that great in managing their money, and I'm sure you've seen your share of celebrity stories of people who made a lot of money then end up losing it. But many of them are also very educated in the investment front, because they had their fair share of losses. They've heard stories of other celebrities losing their wealth, their money over time because of poor management, right? And I think Bitcoin has really become a product of favor, and crypto as well, among many celebrities, because it had this feature of self-custody. When you are wealthy like that, when you're wealthy like Tom Brady, many people are gonna come for your money. I'm not talking about people trying to steal your money, but your financial advisors, your investment advisors, whoever is giving you advice, they want a share of that pie. They want that 2 and 20% management fees, right? And when you have the feature of self-custody with crypto, with Bitcoin, especially, you can be the only person in the world who hold your own, private keys and have access to that asset. So I think this is another favorable feature that many celebrities and these people would look at it as a favorable feature for Bitcoin.
I really like what you said about how people are gonna come for your money, but not like breaking your door and trying to steal your stuff. It's about trying to get the percent of, let me manage your money, I'm gonna put them in these interest funds or on that stocks and so on. And actually for the first time we have a proper working savings account, because I was literally this is like from with my journey down the rabbit hole of Bitcoin. This was really the most key part that really made me to continue dig deeper into Bitcoin education was how, if you're a taxi driver, if you're a hairstyle or whatever, if you save in your bank, you're losing money. Because when you do the math, if I saved $100 10 years ago, 10 years later, without the interest rate that the bank gave me, I actually can purchase less. And I come from a family that, we used to be savers. We used to be a family, that you make $1,000, you pay your rent, you pay your bills, you eat, and then 200 that are left, you just save it. And then actually, when you do the calculations, it turns out it was literally better to spend it right now, immediately, because usually when you're thinking of savings, you're thinking later on, I'll be able to purchase more. Later on, I'll have better, I'll be able to just get better service for the same amount of money. But no, it doesn't work like that. Thanks to Bitcoin, we, for the first time, literally in many, many, many years, we're able to have a proper savings account. So, do you think that adoption curve, let's talk about that. We talked about how these celebrities are being orange-pilled, they understand it, and for the first time they'll be able to say, I don't need you to financial advisors, and they'll be able to say, you must give me really good return if you want me to take the risk to give you my Bitcoin, or sell my Bitcoin for fiat and then give you the fiat. Because Bitcoin is giving me a return anyway, and if I just save, if I just spend a certain amount of my Bitcoin portion, pretty much I will be able to live forever. So do you think that the adoption curve, the S curve, is going to play out, and where do you think we are on it? Can
I just ask another question before that, because you said that the celebrities won't need any advisors, but I think still to this moment, Bitcoin is not, it's difficult to use unless you're tech savvy. So I think they still need some advisors. I'm not saying that those are investment advisors, but they must be some sort of advisors, because I think for the layman, Bitcoin is still not an easy investment. Just private keys, everything. It's not that simple. It's not that straightforward as it's with some other things. If you lose your keys, it's lost and it's gone. So the risk for that, if you don't know what you're doing, is quite big. So maybe just before we go to that point, do you think that's also one of the barriers why we're still not reaching that? Because it's, yes, you can buy it on an exchange and you have those custody services, but like if you want to truly own your own keys, it's still not that easy.
Yeah, I think it's a fair question. This asset, in a way, the crypto asset, in a way, it doesn't work like a traditional asset. I think people who have been investing with the traditional finance part, they'll probably, at the beginning at least, struggle with that. There is no forget password button for your private keys. It's like that. So I think in the long run, we're probably going to see a lot more cold storage custody options that is tied to your name to help you safely custody your Bitcoin, and maybe some sort of multi-sig wallets or something like that. It's going to give you the additional layer of security while not having the risk of losing all your Bitcoin because you forgot your private keys. I think that is definitely going to be more popular. I can certainly see that. But again, on the other side of things, I would think that because we have to look at this investment or this technology from the view of younger generation today. I'm speaking of people who are millennials and Gen Zs and perhaps their kids, and for years and generations to come. I think for people who are growing up in this digital age, who are savvy enough to use a computer, they can probably figure out how to do it. They can, after a try, and like Plamen said, there are lots of YouTube videos out there telling you how to do it, or what to do about your custody, cold storage, and stuff. And I know it may be nerve-wracking if you got $1 million Bitcoin sitting somewhere, you're trying to transfer it. But I think in the longer run, the younger generation will figure it out with no problems. I think we can see this in kids today. My few-year-old niece or nephews, they'll be very tech savvy with their iPad, probably doing a lot better than my parents do, right? And they haven't learned it, and my parents learned how to use an iPad, and they still are not as good as my niece or nephew who are a few years old. So I think the adoption would come much faster in future generations, and especially I think with crypto or Bitcoin being the first asset that they would hear about, the first asset they would own in the long run. Like for example, and Gen Z today, or millennials kids today, it's more likely probably going to own Bitcoin or crypto before they own their first stock, right? So that tells you a lot of information, because now crypto or Bitcoin, it's in the center stage of asset class, is in the center stage of investment for future generations. And because investing is all future oriented, so if you're betting on something that is going to have a faster growth path or trajectory in the future, then crypto asset and Bitcoin is definitely the way to go.
I just wanna mention that in my opinion, the private key security with time will get a lot more streamlined, a lot more easier due to biodata, I think it's called. Like for instance, with my phone, I can unlock it with my face, right? So my face has a unique print. And my point is that, how about my private key is generated instead of from 24 words with my face, using as the 24 words plus a 25th one, which is my own easy to remember password, like whatever I choose, like again, like my dog's name, the street that I grew up on, or whatever, right? And right now Ledger supports on the same device, on the same private key, adding a key phrase, which is the 25th word. And this way, on a single private key, with setting a temporary 25th word, you can actually generate another and another and another and another private key. So my point is that with your face adding another word, with your thumb adding another word, and so on, depending on what metric you can get, you'll be able to just generate a limited amount of keys where you can just like spread out your savings and so on. So my point is that I do foresee a future where losing your private key will be like a lot more rare occurrence than it is today, and especially than it used to be 10 years ago, when people were actually keeping not the seed phrase, the 24 words or the 12 words, but the actual string that was in a text file and so on. And one thing I want to mention is just on Lightning Network, for instance, right now you can create invoices, you can pay the invoices and so on. And one of the newest implementations is actually having this like an email address that is a permanent address where people can send you Bitcoin on the Lightning Network. So my point is that this did not exist at the very beginning. It's a new standard part of the protocol that is implemented. And with time, God knows how many additional, so obvious to us from other parts of our lives, functionalities will be implemented in the crypto world.
Yeah, definitely. I see that as well. I think, if there's a problem that's big enough, people will solve it. So
the unstoppable ETH domains, for instance, as well, just as a good example. The ETH domains.
Ethereum naming services. Yeah. Definitely. And you know, the problem is, as long as it's a big enough problem, there's money to be made in solving the problem. People solve it, and it's not a concern in the long run, but in the short run, it does inhibit perhaps some people with less tech savvy abilities to onboard into Bitcoin, and you know, a good amount of those people probably store their Bitcoin on exchanges, and you hear the stories like that. You know, on Coinbase, people lost a couple $1 million, I think, recently, with some stories like that, and it was because they kept everything on Coinbase, and the reason was probably because they were, you know, they were not as tech savvy, and they decided to keep it on Coinbase because Coinbase is a pretty trusted name. They ended up losing some of their crypto because of that. So you know, it's an adoption curve, and we are on the curve, and we're just growing right now.
Just a point on biometrics. I think the biometrics has definitely its advantages, but once you need to switch, you cannot change your biometrics. That's like, you can change your password, you can change your passphrase and everything. You can never change your biometrics. I mean, never. Like, you know what I mean? It's not easy to change your face, change your fingerprint. It's, if it gets hacked, then you need another option. So that's the biggest downside of biometrics.
That's what I mean with with an additional suffix or a prefix to the biometric data, though. So this way, even if someone, like for instance with my private key, even if someone gets the 24 words, he still has to guess the 25th, which is, if it's long enough, it's still like close to impossible to brute force.
Yeah, maybe in the future they would, you know, take a sample of your DNA to unlock it as a part of the private key program, because your DNA can't be changed. It's not, it's immutable. So maybe something like that. We'll see.
Yeah.
So first they fight you. No, I'm sorry. First they don't fight. First they ignore you. Then they laugh at you. Then they fight you, and then you win. Where do you think we are?
I think we're still in the fight you stage. Clearly, the
Why
SEC...
do you stay still? Why do you stay still? When did the they fight you stage start?
Well, this started, I guess, in 2017, maybe. You know, like, there's always regulating concerns, right? Regulatory concerns from different governments around the world. In 2017, we already see countries banning Bitcoin. Google and Facebook banning advertisement for crypto related products and services. So it never ended. I think in this cycle, many organizations, companies, and governments have adopted a different tune, but other ones have not. So you know, in this cycle, it's more socially acceptable now to stand behind a narrative for Bitcoin, from the standpoint of many companies, right? Like, you know, Facebook and Google, for example. I mean, these companies don't just, you know, eliminate some product from their offerings because they hate Bitcoin or anything like that. They do cost benefit analysis, right? And it has come to a point that it's more beneficial for Google and Facebook and many different tech companies to embrace Bitcoin and crypto assets than to fight it, because there's more supporters now behind it, and there's more money to be made than whatever potential losses they may suffer in embracing this product. So that's good, because you know, companies and corporations are most democratic way of making decisions there is in today's world, because they make decisions based on the free market most of the time. So the fact that many of these companies are changing their tune against Bitcoin and crypto asset, it's a good signal that there's enough force behind Bitcoin that it's gonna push through this adoption curve. On the government side, it's a little different because, different governments, different state have different agendas, different reasons why they're doing things. It may be because they have taken or accepted donations from traditional finance, from the banks, from the existing players in the game, the incumbents of the government. Maybe because it's gonna hurt their centralized control because of it's gonna damage their control of their fiat currencies, their monetary policies, right? So governments, it's a wild card here, and certainly we see countries like El Salvador really embracing Bitcoin. Why? Because for certain countries to take a negative view against Bitcoin and crypto asset, there has to be countries supporting it because it is a decentralized asset and can go anywhere in the world, and it would probably go to a place that is more friendly to its policies and regulations.
I have a few questions, that I would like for us to dig deeper in El Salvador, but before that, because you did mention different jurisdictions, different interests, and some people maybe they're being paid by the old legacy system. And when I think about US and what's happening there, we have people like Cynthia Loomis from Wyoming, who is senator there, and she's extremely pro crypto, and she's open about her crypto holdings, Bitcoin holdings. Then we have the mayor of Miami, and we have a few other names that are supporting crypto, seeing the problems that it solves, seeing the efficiency that it brings, and seeing how it's just a technological evolution that would just make American citizens' life easier. However, three names pop up in my mind when I think about not just crypto skeptics, but literally crypto enemies within the US politician stage. So first one is Elizabeth Warren. She said like so many things against crypto, calling it that it's only used by criminals, that the stable coins are complete scam and so on. Then we have partially kinda Gary Gensler, that maybe he's coming a bit around, and last but not least though, Brett Sherman. So when I mention these names, what is like the first thing that popped up in your head about their opinions on crypto, and do you think that it's because of lack of understanding? Do you think that it's because of they are being maybe paid out? And if they are, my personal question is, by whom? Because we do have lobbying in the States, but the thing is, all the big banks like JP Morgan, Morgan Stanley, and just all of the big mainstream, high street banks offer crypto service, even if it's just to their wealthy clients. And then we have NYDIG that are working very hard, so every single bank within US to be able to have that buy crypto button within their mobile banking application. So if someone's against crypto and is lobbying against it, who is it actually?
Yeah, that's a good question. I would add one more name to your list. It would be Janet Yellen.
Of course.
So
yes.
Secretary, Treasury, Treasury Secretary Janet Yellen. So I would say these are the four horsemen against Bitcoin and crypto, and so I'm not a political analyst, so I don't think I can offer too much insights on the politics situation. But I would say, if you look at these individuals, they probably each one have a slightly different regulatory agenda. And take Gary Gensler for example. This guy, he taught a course about blockchain and Bitcoin back in MIT. So, my general opinion is I prefer anyone who understand crypto, understand Bitcoin to regulate it than someone like Elizabeth Warren, for example, who I think know nothing about this technology. I prefer Gary Gensler to be in the position of regulatory than someone who know nothing about it, because if you don't know anything about it, it's impossible to make the right decisions.
That's the thing about Gary Gensler, though. I'm really not sure that he is knowledgeable about it, because I know that he taught that MIT course, sure, I haven't watched it. I know about the fact that it happened, but I remember him saying that if you, let's say you're in Ethereum and Ethereum price starts crashing and you're on DeFi and you want to sell for stable coins or whatever in order to exit your position, right? And then, you know, like whoever was asking the question, which is obviously against crypto, he was saying, do you know that the price of a transaction like that, Uniswap, let's say, could be $300, and then retail with small amount of capital are the ones that are most under, you know, like pressure and most vulnerable, because they cannot even sell, because it's a $300, could be $300 fee to pay to sell $100,000 worth of Ethereum. And to the question, why is the fee so high? He said, well, it must be stated in the terms of agreement. I'm like, what terms of agreement of Uniswap? Like, it's not a company, you know, it's not like you know, like a registered body. It's just code, and it's just, you know, there is a bit wars on the fees. That's all about it. Like, what terms of agreement are you talking about?
Was he talking about decentralized exchange, like a Uniswap, right?
Yes.
Yeah. I think he was probably saying, like, you know, there should be like a warning, like, you know, this is like a really high gas fees at this time, surging price, and but you
sure,
know,
there is on Etherscan, on MetaMask, like it says, you know, now it's unusually high and so on.
Right.
But it's about that you cannot control this. It's a free market. Of that, there is no company that says, oh, you must agree before you register. Like, no, I register by creating a private key and then I'm registered. And that's it. That's the whole idea of decentralization and blockchain.
Yeah, that's true. I think for the US, you know, for these decentralized products existing in the US, like Uniswap, for example, is pretty US heavy, right? They have an office in New York. It's their team is consistent of individuals who are probably U.S. citizens or U.S. residents. So, you know, with these, with that being the case, there's always the risk of these individuals having been summoned to regulatory pressures or personal pressures to do certain things. You know, for example, implement KYC for the protocol, and we've seen like other exchanges do it, right? We've seen other exchanges who you know, you go on their decentralized exchange and pop up a website. It says, you know, if you are a resident living in these countries, you are not allowed to use our decentralized exchange, and you have to agree to that as a, you know, it's a agreement. You have to click on it and you check mark, and you agree I'm not from these countries, and of course you can use VPN, right? So like, I think you know, the exchanges, the fact that something that Gary Gensler said that does ring a bell is when he said, you know, these decentralized finance are not decentralized finance, they are centralized decentralized finance. He says something like that, which is not wrong. He's not wrong about that. Currently, as we have it, these decentralized apps we have are not decentralized enough that they are completely censorship resistant. They're completely free of any regulatory pressures if any of the team members, the core team members, get compromised. You know, some of these projects have a CEO, they have a COO. That's not the you know, that's not decentralization. Bitcoin doesn't have a COO. Bitcoin doesn't have a customer service, doesn't have a CEO. And that's what makes Bitcoin so, you know, regulatory resistant, because you can't control it. It's collectively controlled by many people, millions of individuals across the globe. But
two questions.
Decentralized exchange. Yeah.
Two questions. Because you talked how Bitcoin is most probably the most decentralized project, right? We don't know who the founder is. He has 1 million coins. Most probably he'll never use the keys. If he still even have them, most probably throw them away or whatever. I think that there is a difference between decentralized, like a team development, and the protocol being decentralized. Because as far as I know, maybe I'm wrong, Uniswap cannot stop my transaction. If I pay a miner to use the Uniswap smart contract, my swap is going to happen. And even if the website asks me, are you a US resident and so on, that's just a UI, that's just an interface. It is not the code. It's just the front end hosted on some server that interacts with the blockchain, interacts with the mempool and so on. So I can myself implement, write the transaction, send it to a miner or mine it myself, and it's going to happen. And no one can stop that. I agree with you. Uniswap has a team which are real people with real passports, with real residency and so on, and they can be pressured. And maybe tomorrow there will be no more development on the Uniswap project. But the contract is out there. You cannot delete, like, the contract from the blockchain. It's already public. Thousands of millions of copies most probably are downloaded offline as well, just to have it and so on. So my point is that there is, to me, a difference between the team being decentralized and open source and the project, and actually decentralized in the meaning of no one can stop my transaction. You see, like, it's different type of decentralization.
Right. Yeah, that is, yeah, that, I think that is consistent with my understanding. I think you're right about that. So yeah, I mean, that's why it's so hard to regulate anything in crypto, because the nature of decentralization, even if there is a centralized degree, and like you said, it's open source. You know, Uniswap gets shut down, second biggest decentralized exchange will rise, and there's, you know, like regulatory system, if they really want to open this can of worm, they'll be playing whack-a-moles, right? You know, whacking each exchanges as they rise, and then the next one, there's always be the next one, and there always be decentralized exchanges offering services from countries that are not bound to your regulations. For example, Singapore is very friendly to crypto, and certain countries in the Mediterranean are very friendly for crypto. And you know, if you operate from these bases, and you know, you're not a US citizen, you don't really have to play by the rules of the US. So it would be, I think it would be difficult to regulate anything in crypto in the long run. And this is, you know, this is my view on this for sure.
Okay, I mentioned, I don't know, something. Okay, my neighbors are doing something. I hear some noises. Do you hear them, by the way? Is my mic picking them up? I can't even hear them very good because of the noise cancelling, so I don't know, maybe you hear them even louder than me. So, Gary Gensler stopped, to my understanding, Security Exchange Commission stopped the Coinbase company from offering the Earn service, and I'm gonna mute in a second. And literally on the checkbox there where you have to agree, you're saying, I'm not from the United States, Afghanistan, Iran, Iraq, Sudan, and I don't know what were the other countries, but pretty much all the war zones on the planet. So share with us, please, your opinion. Why is that? Why did they stop Coinbase from being able to offer 4% yield on your dollars compared to what the US banks are currently giving?
I you know, I have my own personal theory on this, and this might not even be right. But what I think is that when Gary Gensler or the governments make decisions, they're probably thinking about how this is going to do to our government, our fiat policies, our monetary policies. Everything, it has to come together, and they have to sort of think from a policy and decision-making standpoint in the long run, how this is going to affect us, right? this, Coinbase offering 4% yield, this is like the first domino. If this falls, then we're gonna see an allure of products, different companies and services offering these similar type of products. And what does it do? It's gonna take the power away from U.S. banks and from its own monetary policies. If you say that the highest interest rate I can earn from a Goldman Sachs high interest saving account is 0.25% or 0.5%, and Coinbase is offering 4% here, then of course, Goldman Sachs would lose a ton of customers. A traditional banking system would probably suffer in irreparable damage because they would just be losing to the free market on the monetary front. So it's a great concern, I think, for these companies in TradFi, in traditional finance, and regulatory bodies in the long run.
But do you think that adoption could happen so quickly? Because I think majority of people, they wouldn't know, right? They wouldn't know that Coinbase is offering this. I think the adoption would be really slow. On the other hand, that's a typical approach from big companies that have monopoly over something. They don't try to offer better service. They try to squish the competition, right? It's easier to do that than offer a better service. So what do you think?
I think this is just all speculation. I think perhaps there are pressure behind the Gary Gensler to overrule Coinbase offering a 4% interest on the interest earned products. Perhaps it's his own political agenda because he's using this as a bargaining chip against other companies or crypto. Perhaps he wants to use this as a way of expanding SEC's power because he would like SEC to govern not just securities in the US, but all the crypto and whatever asset that could classify as a security. So this would expand SEC's power immensely, and because a lot of the governing framework of what classify or what's constituted as a security is by the substance, right? There's a 1933 securities law, and we check criteria of does it qualify as a security or not. And the fact is, many crypto that are traded on exchange right now, if you go by this framework, probably qualify as securities, and that could add a whole bucket of assets for SEC to govern under this current system. So that's probably another part of Gary's agenda. He'd like to expand this governing power of SEC, regulating more and more assets in the crypto sphere. So it's hard to say what he really thinks, but it's disappointing to see someone with his knowledge and prior involvement in crypto and Bitcoin to use his knowledge and as power against the very asset class that everyone thought he would be supporting.
Why do you think he wants to regulate more and more, just to have literally? Is it a power thing? Do you think? Is it my personal opinion is that there is a lot of corruption happening, a lot of lobbying happening. I think that the data was, again, just by memory, the Janet Yellen's annual salary is $200,000. So for 2 years, she makes $400,000. And in 2019-2020, she got paid, I forgot what was the number, but I calculated that it was over 30 years of her annual salary. She got paid in 2 years from legacy financial systems in speaking fees, meaning making PowerPoint presentations, most probably not even herself. So my point is that I think that there is a lot of corruption going on, and I would imagine that SEC is just wants to for as many things as possible to fall under their jurisdiction, because then there is a lot of more cows to milk.
Yeah. So there are very interesting views on this, and I'll speak of two views on this. One is that it is possible that these speaker fees or consulting fees are just disguised bribes for these regulators, right? And as it happens, this happens all the time in different countries and different part of the world, where even it happens to doctors. For example, you get paid a consulting fee to consult on a project, a couple $100,000 or $1 million on something, and of course they'll ask you for a favor later on, and you would probably agree to it because you already got paid, you're in their pocket, and you can't say anything bad about them, and it's perfectly legal if you structure the transaction this way. So that's a possibility of what's happening. The other possibility, and again, this speaks to Gary Gensler, a lot of these politicians and regulators who are putting in very strict regulations or trying to push through strict regulations for crypto, is that they're thinking about their exit plan. These regulators, many of these regulators are not going to stay in the public side forever. Many of them would probably convert and go to the private sector later on, because public sector is, sure, there's speaker fees to be made, but it's not a very profitable career. If you're just going to become a public servant, Janet Yellen makes $200K on paper, right? That's not a lot of money. But if, say, for example, as a politician or regulator, you make very strict rules and you embed some loopholes in the system, because the regulator papers could be hundreds of pages long. You embed some loopholes somewhere, and then you quit your job in a couple of years. You go to the private side. You get paid a couple $1 million a year working for private companies, using the loopholes that you embedded into these regulations to help these companies become market dominators. Right?
Okay, I never thought of it from this angle. That's very interesting. About creating loopholes that you're going to take advantage of later on.
That's another possibility. So this view was actually expressed by Nassim Taleb. So Taleb is one of the guys that I read a lot about. I read all his books. He definitely taught me a lot of unique insights.
I'm going through Food by Randomness right now.
Yeah, that was his, I think, second or first book. Really good book.
But every time he speaks about Bitcoin and the Bitcoin price is up, he's just like the angriest man alive.
Nassim Taleb?
Yeah.
Yeah, he used to be a supporter for Bitcoin. I don't know why he changed his tone back in later last year. He was a huge supporter for Bitcoin, and
I didn't know that.
If you read his books, for his worldview, Bitcoin would have been the top tier of assets, and the fact that it was until he changed his opinion last year somehow. I didn't get too much into it, but it's funny he changed his opinions after so many years of supporting Bitcoin. He called it an open Ponzi, you can poke holes in his argument, but you can't have really solid tangible evidence to say that he's wrong. Like, it can't be, it's like arguing, does God exist? You can't say that it does or it doesn't, because there's no evidence to support either way. So, it's the same thing with Nassim's Taleb's view on Bitcoin. I think is that you can't say that he's entirely wrong, because his argument for Bitcoin being an open Ponzi also makes sense, right? It's just time will tell what would eventually happen. Of course, I'm not supporting his point of view. Otherwise, I wouldn't be here today. But I'm sure he's an intelligent guy. He sees things from different perspective. He had a change of heart for Bitcoin. and that's the way it is.
Okay. Unless you wanted to ask some questions.
Yeah, I mean, just because I'm trying to be mindful of time, I would really like to touch a little bit on-chain analysis and just your opinion, because I think we discussed a lot of time, like we discussed high level, but I'm really curious about like which tools you're using, which metrics you're tracking, which metrics you think are worthy or like make sense, which are like a little bit long term. Can it be used short term? Like I have so many questions about on-chain, to be honest.
Okay.
Yeah, all great questions. I think on-chain analysis is something that didn't exist to the extent it has today in the last cycle. And it's a great tool for analyzing information that are embedded in the price actions, because you could have, Bitcoin could be, I think Bitcoin is 48,000 today. So Bitcoin could be 48,000 today. It could be it was $48,000 back in February, and it was briefly 48,000 back in April, just before the drop. But all three times, in all 3 points of time, the price is the same, but the makeup of the holders, the on-chain activities could be entirely different. And that tells you a lot of useful information you would not have just looking at the price, right? First of all, I like to say that, technical analysis is something that I really believe for crypto. Why? Simply because crypto as an asset class, Bitcoin, Ethereum, altcoins, it has fewer fundamentals than traditional equities market, than commodities market. And because of that, because of the lack of fundamentals analysis you can do for these crypto assets, and technical analysis is going to play a bigger role than it has played for traditional asset classes like stocks and commodities, for example. So technical analysis, I think, is a must. It's a tool that you also have to be mindful of in doing analysis for crypto. But combining with that, there's also macro analysis, there's psycho analysis, there are fundamental analysis, and of course, most recently, you have on-chain analysis. So what on-chain analysis does, in a nutshell, is it analyzes the behaviors embedded in the price actions, right? Like I said, same price, different on-chain activities. And I'll mention a few on-chain matrix that I look at. For example, active address, total number of address. These are the most basic on-chain data you can look at. Obviously, they are, it's correlated to the price, right? And this is correlated, it's not a causation, because as price go up, on-chain activity also goes up because more people are buying, selling, holding, transacting with it. But in general, if you look at it on a long-term view, from back, in the case of Bitcoin, for example, from back in 2013, when we had this data, to what it is today, if you look at the long-term trend, you can probably find out the multiple between the price and the price and the on-chain activities, on-chain transactions, and the active address, the number of on-chain active address. So there's a ratio that you could analyze to see where we stand in this ratio. And in general, it trends up because there's this network effect. The more activity there is, the more valuable each activity is on-chain. So it trends up over time, but this is on a basic layer what you can assess for on-chain level.
Sorry, but would you say that the address number and count, like, is that a leading or a lagging indicator? Because I mean, in my opinion, the number of addresses is a lagging. So the more hype there is behind Bitcoin, the bigger, and like the more people become. But it's not a leading. It's a causation, right? I mean, that's how I view it. Maybe you have a different opinion, and that's what I would like to discuss. It feels like a lagging indicator.
I think to a great extent it is, and it feeds into each other. Like the on-chain stuff, the active address and the price feeds into each other. More active activities, more usage on-chain, and there's more increase in the price actions, and more in the more price goes up, and there's more more people adopting Bitcoin, more people buying and holding Bitcoin, transacting with it, right? So, but that's why you have to look at it from a long-term perspective, back from 2013 to today, and you see that in general it trends up, and there's a ratio, there's a correlation between the two, between the price and the active address, and this relationship, you know, it's trending up over time. And a lot of the on-chain analysis are based on assumptions, right? They are based on you know, this is one caveat I have to mention. They're based on intelligent way of grouping data. So it really depends on the quality of the data and the quality of the people that are sorting these data for us to view in these different on-chain tools and analytic systems, right? So if, say that, and this is the work of data scientists, and that I pretty much know nothing about, but you know, the way that they group their data, and they have their own proprietary way of grouping the data intelligently to give you useful ways to putting in different ratios, analyzing the data, the price versus the different type of data. But the data has to be right, and the data also uses assumptions. For example, what constitutes as a long-term holder? What constitutes as a short-term holder? How do you know that this is related entities? Well, they do it based on the historical transactions between the addresses and stuff like that. So a lot of these is assumptions. So we can't say, you know, with 100% certainty that this is what long-term holders are doing, this is what short-term holders are doing. We are merely extrapolating the information from the data that we do see from these analytical platforms. So one of them is that I use is Glassnode. One of them is a CryptoQuant. So these are, I think, the two leading on-chain analysis tools. There are also other tools like, for example, Nascent. I think Nascent is a tool that use the data in a different way, that it tracks the wallets and identifies specific activities for different wallets. They group the entity together. For example, on Nascent, you'll be able to identify who are Three Arrow Capital and what are they doing with their Ethereum. Are they buying, selling, sending it to Coinbase, and having the data in that way. But the two that I use most often are CryptoQuant and Glassnode. Both are great analytical platforms, and because I know that each platform have their own data science team, and they have their own proprietary way of grouping information, I usually try to see if there is a consistency with the data between CryptoQuant and Glassnode, and usually most of the time there is. So they're telling me the same information, drawing from the same data set using different algorithms in grouping the data. So, you know, that's where on-chain analysis begins.
Just a quick question. You mentioned CryptoQuant and Glassnode. So I think 3 weeks ago there was this massive crash on Friday, and 2 days before that, CryptoQuant notified me that there was massive inflows, which means that whale inflows into exchanges. And I sold some of my leverage positions, luckily, and the crash happened. But if I look now, that spike is not there in the history anymore, which makes me like wonder: is there something that they changed retrospectively, or they just rebranded those addresses to something else? Because I have a screenshot when there was a massive spike going, and that was like 2 days before the crash, and it crashed later on. But was it actually caused by those inflows, or was it caused because a lot of people thought of those inflows? It's really interesting. Like if I look at this now, there's zero inflow at the same time when they messaged for those inflows, and that's really interesting to me.
And just to mention that the info was consistent, so it was not like a spike and then dying out. It's going up, really up, going down, but still high, and then going down. So it's like a, you know, like a D shape with a spike in the middle, right? So my point is that it stayed for a while. It wasn't like a 1 hour anomaly. It was like a 48 hours consistent high inflows that now 20 days later, when you look at the chart, it's just not there.
Yeah, I think, and this is what I think happened, is perhaps because some of those addresses got rebranded to other groupings, perhaps. That's the most logical explanation I would have. And obviously, CryptoQuant would probably be better answering these questions. But what I do know is that these on-chain analytic systems, they do change their, they do perfect and they do change their data sets and their grouping mechanisms from time to time. And especially when sometimes, you know, they see, oh, it's a huge unusual activity that happens on-chain that they didn't expect. And for example, a large withdrawal from Bitcoin exchanges, massive withdrawal worth billions of dollars in the same day. Well, they probably gonna take a look and investigate if that is because it's an inter-exchange transfer. And sometimes they are. And that's why they have to go back and change the data so it's correct to the point that they think it has been. So that's probably what happened. So, you know, there are a degree of noise in analyzing this. Like I said, lots of assumptions being built in, right? Who this wallet belongs to. Does this wallet has associated entities? Is it a long-term or short-term holders? You know, a lot of the things that are based on assumptions that the data science team make, they will think, okay, I think I know what this is, but sometimes, of course, they're wrong, and that's what happens.
Yeah, no, I was curious if you noticed something similar, because I think I noticed something similar one time before, but it wasn't so significant and it wasn't correlated to a massive crash afterwards. But this one was just 2 days before a crash. It was literally massive, the biggest one in the last 3 to 6 months, I can't say. And now it's completely gone. And that's why I was like those kind of things. I mean, I always held CryptoQuant in high regards, but this one was, it put a black mark, at least from my perspective, a little bit, because it does, like, if you follow the data and you trust the data, and something like that happens, like, do you think, like, was this just a OTC deal and they just rebranded it or something like that? It's possible. I know it's possible, but it does feel like they do have the power probably to manipulate. If I don't know how many people are using CryptoQuant, probably a lot, and it probably informs a lot of decisions as well. So something like this can have a massive impact on the market. I'm just saying. Yeah,
it certainly could, and you know, this could just be a mistake, and it's hard to you know, it's hard to be the source of a reliable data when you are a derivative of that data. You know, it's like, sure, CryptoQuant and Glassnode all took the same data set and they try to manipulate it in a way to generate useful information. Like, for example, some fancy indicator, whale inflow or whatnot, right? I mean, the fact is, the more fancy the indicator is, the more difficult it is to, you know, to actually get the information right, because, you know, you're manipulating the data too much. And that's why on a simple front, you know, the simpler the data is, perhaps the better they would be in actually being correct.
Okay.
Yeah, I would agree. Yeah.
You know the supply shock ratio Glassnode metric.
Mm-hmm.
Actually, it was one of these metrics that was leading to the crash. It didn't start declining after, but before the crash happened. So do you have an opinion on leading metrics?
Leading metrics. I think the few that I look at, exchange balances, a very simple one. That is a leading one. Inflows and outflows, if there's any unusual activities. And other ones such as the long-term holder and short-term holder ratio changes, right? And that's I think that's what you're referring to as in liquid supply, right? Because long-term holders tend to be bullish at the right time and be bearish also at the right time. So also a group that I would group in together as smart money would be Bitcoin miners. Bitcoin miners that exist today, they've been in this cycle. They've been in the Bitcoin since 2013. They've been to 2 cycles. They made a lot of money, lost a lot of money. They learned their lessons. They, at this point, I say they're pretty smart money. They know how to manage their Bitcoin to maximize their profitability in the bullish times. Because when the bear market comes, these miners will lose money, and they will lose money for a period of time. The chance that they have to make the maximum amount of money is in these bullish times. So their livelihood depends on them being right about the trajectory of Bitcoin and where it's going. So miner activity is something that I closely look up on as well.
But the thing is though, when you say miner activity, the first chart that pops in my head is the one that's like this until February this year, I think it was, and after that it's flat, like it's dead, it doesn't have a pulse anymore.
Are you talking about hash rate?
No, I'm not talking about hash rate. Hash rate was going up until April, then it dropped massively, now it's going up. That one has a pulse, it's completely different. I'm talking the miner supply or something, like how much Bitcoin they are holding on the miner's address where they mined the Bitcoin to. If I'm not mistaken, and I'm quite sure I'm not, since February, miners are not net sellers.
Yeah, so miners, inventory. So mining inventory
Sure, yes.
is what I look at. Inventory would be defined as the whatever Bitcoin they hold after selling Bitcoin, that certain amount of Bitcoin they mine. So on a given day, they would have inflows. They would mine X number of Bitcoin and they would sell Y number of Bitcoin. As long as X is bigger than Y, in this case, they are net accumulating Bitcoin. And conversely, if they're selling more than what they mine in that particular day, they're net distributing their Bitcoin. And for miners, they are, they treat this like a business. They are speculators, but they're not degenerate speculators. So miners tend to sell their Bitcoin. In my analysis, miners tend to sell their Bitcoin when it hits a new all-time high, and they would they'll net distribute, they'll sell more Bitcoin than they mine until it reaches a new all-time high to the cycle end. So miners had been accumulating Bitcoin. They started selling Bitcoin as soon as Bitcoin hit that all-time high back in last December. So from 20K to 40K, miners dumped, net sold, or net distributed a large quantity of Bitcoin. Perhaps, maybe even 50% of their holdings. I can't tell the exact number on top of my head, but it was a lot. And then they gradually, so they've been distributing less Bitcoin from the period of February to May of this year. And then since May of this year, so in period of May to July, they've been selling some Bitcoin because I think, this is net amount for all the inventories, for all the miners. So this includes a lot of miners in China who perhaps had to sell their Bitcoin because of the regulatory pressure, and they have to finance their operations overseas. So they have to sell a lot of their Bitcoin in that case, even when the price was at like around 30K. But since July, miners have been net accumulating Bitcoin. That means they always hold more Bitcoin than what they mine on what they sold. They always, I said this wrong. They always kept more Bitcoin on a net basis on a given day after selling a certain amount. So this regards as a bullish sign because miners are obviously expecting the future price of Bitcoin to go up to hold inventory like this. Otherwise, they will sell Bitcoin, right? If they think that we're going down to 30K or lower, then of course they'd like to sell their Bitcoin when the price is right. So they could be wrong, and some miners have been wrong in the past, and that's why in cycle in the miner capitulation happens when some miners just get screwed because they had to unfortunately sell a lot of their Bitcoin at losses, it happens. But so far, what I'm seeing, miners are still net accumulating Bitcoin, and I see that as a bullish sign that miners are expecting higher Bitcoin prices in the immediate future.
Yes, so this is the chart that I was talking about. I'm sharing my screen. So it's called Miners Position Index, and since I think that's about February. What is it? Oh, March, 4th of March. Yeah, end of February. It's just like flat, almost flat, obviously, not completely. But before that, we see very big spikes.
Can I share the same chart but with slightly better? I think your problem is because the inflows were so high that the net accumulation feels like almost nothing is happening. But I think this would be...
that was not the same chart I was looking at. I was looking at what's called the Bitcoin inventory. So
if what you were showing, Plamen, was this portion from this red line somewhere and this, and if you extrapolate and you compare this to this, then yes, this probably seems flat. But if you look at it like slightly more historically, basically this was distribution and this was accumulation, and it's literally the same chart as you were showing. It just slightly different graphics over it. Right. It's just that you don't have enough history to, and you have too much noise. So this is like slightly smoothed moving average. It's 30-day, I think, yeah. And your one was like, there is a lot of noise. You can't, it's difficult for human eye to see when it goes up and down. That's why, but this makes much more sense.
And this is a 30-day moving average?
This is a 30-day, yeah.
So when it's at the bottom, when the curve is at the bottom, it's accumulating? Is that right?
Yeah. Yeah.
Okay, yeah.
So as far as I understand, if it's above zero, they're selling more than buying. I mean, more than holding. And then at the moment, they're selling less than they're mining.
Accumulating,
yeah. That makes sense to me. But the chart that I was looking at, it's a simpler one. I was just looking at the miner reserve balance. I think that's what it's called on CryptoQuant. And then that one tells you it's more like a balances over time. So that's the one I look at. The data, the indicators I usually look at are like simpler charts. Like I said, the fancier the indicator is, the more prone to mistakes in the data and the way they're grouping things. So I like to look at simpler charts, like for example, just the inventory balance, to see what are the relationships. Things like that can help me with understanding the miner situation.
Okay. Okay. I think also, the long-term and short-term holders supply ratio is one of these that really shows if someone have held over 6 months and now he starts selling, or is he still holding and even accumulating more.
Long-term holders, they've distributed a little bit of Bitcoin when it was around new all-time high again, 69K, and in that glimpse of time. And so far, there's no trend of them distributing, lots of Bitcoin. So the trend holds that long-term holders are still in a net accumulation trend, and that trend is intact.
Okay, so would you, okay, aside on-chain, which ones would you say are the most important moving averages price-wise, and maybe do you use Fibonacci levels at all, anything like that, just like price chart explicit?
Yeah, price wise, I use a little Fibonacci from time to time, but I like to use simple indicators. So for price technical analysis, my favorite for Bitcoin is 200-day moving average. If you go back in history, 200-day moving average, simple moving average, is the line to hold for the line between bear market and bull market. In bull market, 200 daily moving simple moving average, it's the support for Bitcoin. In a bear market, is resistant. So that is one indicator I look at and I hold dear to my heart to see what's going on with Bitcoin's price action. And of course, you can look at 50-day moving average as well for Bitcoin. For Bitcoin, that acts as a short-term support sometimes. And you can look at on the weekly chart. On a long-term perspective, you can look at 50 weekly EMA, for example, and that tends to be that has been the support that Bitcoin has bounced off a couple times in this cycle. It has recently just bounced off that just this week. 50-week EMA. Other things you can look at 21 weekly EMA, 34 weekly EMA, and of course you can look at the Rsi indicators, which is something I look at as well, to see if we are in a bullish or bearish trend based on different time frames. This perspective also changes. We could be in a short-term bullish trend, but a long-term downward Rsi trend that hasn't broken out yet, right? And there are different divergence you can try to capture with different indicators. For example, as Bitcoin, the biggest divergence, and this is like one of the biggest thing that I caught back in July of this year, was when Bitcoin was at 30K, we have multiple divergence going on with Bitcoin. And at least there were 3 of them that I can think of right now. I did analysis on all of these, detailed analysis. One of them was divergence with S&P 500, right? Bitcoin tends to be an asset that correlates with S&P 500 over time. However, there are periods that Bitcoin outperforms S&P 500 in divergence, and there are periods that the trend converges. So based on that, back when Bitcoin was 30K back in July of this year, the stock market was still going up and up. Bitcoin was just going down and down. So the divergence at the time, I believe, was one of the biggest that I've caught in the recent history of Bitcoin. Second divergence I caught was the divergence between Rsi and Bitcoin. Rsi were starting to trend up, and this is another bullish divergence. Bitcoin price was still going down. So that shows that momentum on Rsi measurement has shifted to bullish, but the price, it has not reflected that yet. The third divergence I caught was the divergence between fear and greed indicators. So fear and greed indicators is a pretty crude metric, but if you plot in a chart, there was a divergence back in the summer when Bitcoin price was going down, but in the fairness scale, it was going higher, and that was another divergence. So when you see divergence happening like this, when you see a multiple set of divergence together, we call it confluence, right? And combining with, in the summer, there were different on-chain data that were telling us miners accumulating and whales accumulating, in liquid supply we're going up, and that just a whole mix of things that give us a really strong confluence that this summer at 30K, it was time to be bullish. It was time. Of course, it could go down at that point, but it has got to a point that, the data suggests otherwise. So I think many people who use a confluence of analysis in the summer, they probably cut that 30K as a bottom to catch. So that was as good as a bottom catching was, because there were just so many confluence in data sets.
And also for the first stop that we had that we went to 60K, the price was going up and the RSI was going down. I didn't call that one, or I did, or I unintentionally ignored it, but that divergence was massive.
Yeah, the thing about divergence is that it doesn't always play out the way it doesn't always play out perfectly, right? Like, sure, divergence, Bitcoin, if you spot the divergence, the RSI divergence, actually bearish divergence, actually started in February. So started with like that 42K top. So if you realize there was a divergence when the price was going up, but then the divergence was going down, then you probably would have sold your Bitcoin at maybe like 50K, right? At the second top in the divergence. But then the thing is, you missed out from 50K to 65K, right? And that's another 15K of unrealized gain that you could have captured if you didn't sell in that period of time. And and the thing is, market psychology comes into play at that time. If you have sold based on this divergence analysis, if you sold it, and then you realize, wow, it's actually going to 65K, how are you going to feel? You probably feel a certain degree of FOMO, and maybe, just maybe, that some people who felt that would actually buy back into the market thinking that it's going to go up again. So it's the indicators and stuff sometimes can be tricky to see the exact top and bottoms, and it's never perfect. It's never perfect. And that's why I would say only like in the summer, when we had confluence of so many different divergences, that's the point that I felt more confident to say that, okay, maybe we're at a bottom at 29K, at 30K here. But it never looks like, it never looks that way when it's at the bottom, because 30K, it was pretty fearful because it broke a key support back in the summer. And the next support on chain and the technical side, it was probably mid 20s, and the next one was 20K, and many people were calling 20K targets back when Bitcoin was broke down from 30K. But if you're a contrarian investor, you'll look at this many confluence in divergence, in contrarian evidence of what the price is telling you, you'll probably make the opposite decision.
And just touching again on this, do you think there is like a metric on-chain metric that you can follow that can inform you, like for short term? Because most of these metrics we are looking at, they're more long term, like accumulation. But is there something that you could like, okay, something's happening now, and this is something I need, like it can influence the price in next 24 hours?
Deposits, I guess, are quite instant. Massive deposits. Like
deposit, yeah. When there's massive deposits, that could be potentially a sign for a sell-off. Anything else that you would like recommend, or like that you're using personally?
So personally, I'm not a trader for Bitcoin. So personally, I look at good prices to add. So when there are corrections like the one that we just had, when there are opportunities to buy at a really great price in the long run, I add to those prices, and I hold my Bitcoin in the long run. But something that I've been noticing in the short run, right? One indicator I'll pay key attention to is probably open interest. So what happens here is, especially if you have leveraged positions, I think it's very dangerous to enter into a leveraged position or any position when the open interests are at all-time high or just keep making new highs, right? Whenever that happens, there tend to be a liquidity, liquidation event for those leverage open interests. And it has happened back in May of this year. It happened back in September of this year. And it happened again in most recent history, the past month or so, when we had that huge liquidation event all the way down to 42K. And when that liquidation event happened, you see the open interest just drop. Like it's a vertical
4 billion,
drop.
I think it was from 22 billion until 18, something like that.
Exactly. Yeah. So, I would not want to add when the open interests are trending up. And when it hits a new all-time high, it could go higher, but I would be very cautious because, a liquidation event like that, it's likely to happen. And in fact, it has happened many times in the past. And that's when that liquidation event happens, that's when I'll be buying. So on the day of the liquidation event, down to 42K, I was actually awake at the time and I saw that it happened. It was, whether it's you're looking at a short term or long term, that was a great price to buy, because even in the short term, you want to sell your Bitcoin in 24 hours. If you buy at the bottom of the wick and you sell it in 24 hours, you guarantee to make a few $1,000 per Bitcoin, because that's how it is with these liquidation events. I always go to extreme low wick, and it recovers inevitably to a degree. It may not go up to higher than liquidation event before, but it would go up than the bottom of the wick. So, if you catch the bottom of the wick, you can make a couple $1,000 per Bitcoin in a short-term trading way. But if you want to hold it in the long term, that liquidation event was also a great price to buy. And I added some Bitcoin on that specific event.
But catching the bottom of the wick, I guess that's even harder than catching the top of Bitcoin, in my opinion.
Yeah. So I didn't catch the exact bottom of the wick, but I did catch a pretty good cost basis. So I think at that time it went from like 51K all the way to like 42. Obviously, I used a centralized exchange, so the exchange were actually glitching out. I put my order in, and then it gets executed. I have no idea if it was executed or not, because all the orders were stuck on the book. They had some problem filling the orders, and that's a problem with centralized exchanges. When large volume happens, they're not able to handle it. So I ended up finding out that I didn't catch the exact bottom, but I caught a pretty good price on that day. It was my long-term buy anyways. So, it was a good price in the long run.
Yeah, because I remember last year, it's still last year, the 2020, the first Corona crash, when Bitcoin crashed. I think it crashed for like 8 or 9K all the way on different exchanges, but it crashed like 70% literally. And I remember it was dropping and it kept dropping and it kept dropping. And in days like I still have PTSD after that, because you never you think, okay, this is crashing, but that taught me like the selling pressure, the liquidations that happened that day. I still remember it. Like, it was insane. It was insane. Like the price just kept on going down insanely fast, like unimaginably. And that's something I still feel like, if there is a large crash, like at that time it didn't, like when we look at it like retrospectively, okay, yeah, it was Corona crash, like Corona came out and you justify it, but like at that point it wasn't so justified. I think it was, and that's the thing, like when it starts happening, like maybe in 1 month you say, okay, that crash was obviously happened because of an X reason, but when it's happening, you don't have all the information. Some people have more information, some people have less, and that's what makes it scary, because you never know. Like maybe when it was crashing to 42, it could continue crashing to 30 or even 25K, and that's why like it's catching a knife, like it's catching a falling knife, right?
Just wait for the upcoming Evergrande crash. We just haven't experienced it yet.
Yeah. And I know it's scary. It's it seems unreal, like this is not something that you see traditionally with traditional market. Like the stock market have circuit breakers, and different countries, their stock market have limit down days where if it goes over 10% in ups or downs, it gets limited, it stops trading. That's not the case with crypto, right? And I think it's a part of the libertarian education. You just have to embrace it, because that's probably how the free market is acting. If there are no forces, artificial forces regulating it. And the same thing with, holding your crypto keys. If there are no, artificial parties helping you as a bank, holding custodian of your assets, if you're keeping your own assets, managing your own private keys and all of that, it's a part of the libertarian education. It's just like having a safe at home. Before the days when there were banks, having a safe at home, you're going to do all you can to govern your assets. But of course, if someone come and rob you, they can rob your safe, right? Or if you forgot your safe, you forgot your password, or forgot where you hide the money. I mean, back in those Wild West, they're probably not even safe. You probably bury it in the ground somewhere in the desert as your safe. But if someone coyote find it, they took it out and the money is gone, right? So this self-managing perspective of assets and embracing the volatility of a free market, I think is a part of a necessary education for libertarians. And I support the views of libertarian, and I like the fact that these things are educational for many people in the long run, especially for younger people who first dip their toes into this asset class, who had no prior investing experience, and they're going to learn so much from this, more than they would learn from trading stocks or bonds and saving that money in an interest account at a bank. They're going to learn so much. They're going to add so much skill set in their toolkits to be a libertarian in the long run.
Yeah.
We've hit 2 hours already, so I would suggest that we make in next year we make another episode of the podcast. But I have one last question that I would like for us to go over, which is important to be in this podcast, which is so I had on the list like DAOs, Ethereum, DeFi, NFTs, outs, and so on. We're just gonna go over that on the next episode. But for this one, I really want for you to just comment on what most important tips and tricks would you advise for crypto newbies, people who, let's say, they're saving $500 a month. Maybe they will already have saved 5,000 or whatever, and they're quite fresh, regardless if they started a month or two ago, regardless if someone is going to start in a month or two from now, but watches this podcast. What would be your advice for them?
I think for anyone who just started this journey with crypto investing or just learning about crypto, I think the most important thing is to learn, and the second most important thing is to learn with skin in the game. What I mean by that is actually putting your money into the market, and not financial advice, of course, but I think a key part of the learning comes from having skin in the game and having that as part of your experimental learning process. So you can learn, you can read about Bitcoin, you can listen to all the podcasts you want, you can read about articles and different on-chain analysis, be on Twitter for a couple hours a day looking at these Bitcoin and these crypto asset and information analysis. If you don't actually have dollars or have money behind it, if you're not investing in the market, if you don't have skin in the game, you're not able to think like someone with skin in the game. So I think really important, the message is, we're still early. The fact that we are there's still so many regulatory resistance that haven't been figured out yet. The fact that we don't even know what a good consensus mechanism is going forward, whether it's going to be proof of work or proof of stake, yet. That everything that's happening in the past year, if it's any indication, is that we're still early on this journey. I know that crypto as an asset class, it's around at this peak around $3 trillion, but it's really nothing compared to the the overall effect that it will have with it being an asset class, with it changing so many goods and services being offered, changing economy, changing the definition of money going forward. I believe we're still early, and that means there are a lot more money to be made in the long run than the short run. So in the short run, have a little money, have skin in the game, and just learn as much as you can, learn as much as possible. And a big part of this learning comes from not just putting into Ethereum and Bitcoin, but doing an experiment. If you want to invest in that meme coin, right? If you want to listen to some YouTube influencers telling you to buy this or trade that, go ahead and try it out, right? It's all a part of the education and experimental process. I think as someone who supports the libertarian perspective, I think it's key that people, especially new entrants of the market, educate themselves about crypto, about trading, about NFT, about the latest trends in investing. Many of the trends that you see today are probably just beginning. NFT got its huge takeoff this year. Lots of buzz in the media, people making lots of money. I personally know a lot of people holding 6 or 7-figure NFTs, in their portfolio. It's a good starting point, but we have nowhere got to the point where this market is mature. This is just the beginning infancy of something like NFT, of something like decentralized finance. There's so much to come, and I think you really gotta stay on top of things in the market, right? And this is perhaps a little time-consuming to do, because I personally feel like if I hadn't been on Twitter for a week, if I haven't seen what the latest development is with different blockchain, with different projects, with different DAOs, I'm missing out on a lot of information. And the fact is, I would probably be missing out a lot of information if I hadn't been staying active with following these information, because it just happens so fast. Innovation happens so fast every day in a different place in crypto, and that's a great thing. Innovation, this level of innovation it happens because of the lack of regulations, because of the lack of people setting rules on what could be done or what should be done. And innovation comes in free market experiments, and that's exactly what we're seeing right now. And that's why we see things, for example, like Constitution DAOs raising $45 million in 7 days to buy a copy of a US Constitution, right? And these experiments are being played out every day. So I would say, don't be afraid to experiment. Know that we're still early. Learn as much as you can, and have some skin in the game. In the long run, just know that this knowledge that you have will do you wonders in the long run. We are living in a world that is becoming increasingly difficult to understand. If you're looking at it from a traditional point of view perspective, if you are someone who grew up in the 1930s, you probably have a really tough time understanding the world and the changes that it has been for the past 2 decades. And the innovations and changes are happening in a faster pace than ever. So if you're not on top of these things, there's a chance that you may get left behind. And that's why it's really important to at least learn about blockchain, about crypto, because this is not going away. It's only going to get bigger.
All right. I think we should end it here. Lesh? You're muted. And Lesh says goodbye. Thank you very much.
Sorry.
Okay, we got you back.
Too many buttons. Well, thank you for your time. It was really good.
Thank you, Plamen. It was a great pleasure to be on your podcast, and happy to do a part 2 at some point.
Absolutely. I just earlier I was thinking how crypto influencers say, oh, here's a 100x crypto gem, right? And this is how I look at your Twitter profile. It's literally one of these gems that not a lot of people are paying attention to, but I really, believe that this is going to change in the coming year. So if people want to follow you, what should they do?
Well, I have mainly on Twitter. I post a lot of analysis and insights, short-term and long-term, Bitcoin, Ethereum, altcoins, and recently started with my NFT journey as well. So to follow me on Twitter, my Twitter is Venture Funder, and I'm also on YouTube, but I'm not very active as a YouTube channel. I'll try to post more videos going forward because I really enjoy having conversations like this one that we have. So maybe I'll start on some podcasts on my own, talking with different people in the industry, and I'm overall very excited for this journey that all of us are on, and we'll see where it takes us.
Okay, awesome. Thank you, guys. And thanks for everyone who stayed till the end. And hello for everyone watching in the future. For me, the most important takeaway from this podcast is that there is many ways to analyze the price and pull the trigger. Am I going to buy this dip? I'm gonna wait for a capitulation. But to me, the most important thing is crypto is here to stay, and it's going to get only bigger in the upcoming years.
Absolutely.